there's still some trust that's not there between buyer and seller, but to apply a letter of credit structure, it's costly. So therefore, until today, these buyers and sellers had the problem of who is bearing the risk. This is a typical delivery versus payment situation that the buyer says, I only want to pay when I receive my goods. And the seller, he says, I only want to deliver when I get paid. So somebody has to take the risk. In trusted relationships, buyers and sellers that work together already for a long time, it's not really a problem. But for a first relationship, a first trade, the problem is still there. Yeah. What did we do with the project? Actually, if you compare it to a letter of credit, where banks are involved, it's quite similar. The buyer initiates a purchase order with 60-day payment terms to the supplier. Yeah? But the banks are involved now, and we say the buyer requests the bank to provide a bank payment undertaking. Actually saying, you bank, can you say that I will pay whenever I have the goods delivered? And that promise of the bank, the buyer's bank, is put on a network so that the supplier can also see it. Yeah? That brings trust. It brings trust for the supplier that the buyer will be able to pay. The supplier ships the order, sends the invoice through the platform, the buyer confirms, and the supplier asks for his bank for invoice financing, for instance. That's optional because he gave 60-day payment terms. So the supplier bank also can have extra value to the supplier. Yeah? And then the buyer's bank debits the buyer account and initiates the payment of the invoice on a due date. Yeah? So this is fairly similar to a letter of credit. There's a need in the market, and then you say, okay, let's find a solution. Okay, we can start building this. We can build this the traditional way, without blockchain. Without blockchain, we as banks, we communicate a lot. We communicate via SWIFT. So the order goes, the buyer's bank issues to the buyer issues to his bank the question like, can you provide the bank payment undertaking? Yep, the bank will do that. And then you have the communications between all different parties, but also the changes. Yeah, the order amount changed. So everything has to be reconfirmed again. So you get a lot of communications between the different banks who have all their own systems, and they all have to reconciliate at certain points whether data is still okay. Now, if we would use blockchain, we would have one similar database at every bank, because blockchain makes that all the data is synchronized between all the participants. That makes life much easier, because the buyer bank asks for a bank payment undertaking to its bank. That bank puts it on the blockchain, and it's confirmed already in the other nodes, so also to the seller. So they have the information at hand. Yeah. You can use the smart contracts. You can say, if the goods are delivered to the transporting firm, they take over the liability. If you enter that transaction on the blockchain, you can have a smart contract that say, if the goods are on the truck, pay. So at that point, the seller knows, I put the goods on the truck, I get my money. Delivery versus payment. Yeah. And that's typical things that are very good to use blockchain for. You also have this problem of counterparty risk, of course, that is taken away, because you know as a seller that you will receive your money. And it's a private network. The clients that we allow on the network already pass the know your customer process in a bank. So we don't allow new customers just like that on the platform.